Hi guys, I wanted to record a very quick video on just a very on a topic that is really of interest to me, and I'm sure you will benefit one or two of you when you go through this with me. And the topic is on various techniques. And the question is, do I go for a high reward technique or do I go for a high probability technique? Which is better? Which works better in the long run? Um, and my answer to that really will come at the end of this presentation to let you know which is better, if there's any that is better. And so let's first look at the high reward techniques. Now, these represent trades where you have high reward to risk ratios. So where you have, for instance, in this image below here, where we have a trade setup, a sell trade setup, and the stop loss is above there where you have the high candle there, and that's where the stop loss is. The entries at this point here, and this is where the profit was taken. Now this technique is really a moving average technique where we have four moving averages, and in this case it was a sell trade, and we entered the trade when four moving averages crossed downwards, and that was an entry signal, and we exited when the lower two moving averages crossed up, and signifying that the trend may be coming to an end. But for the benefit of what we're trying to discuss here, what we got at this point was 137 pips stop loss against 592 profit pips, which give us a reward to risk ratio of 4:1. So that's a high reward technique where you have the stop loss being significantly smaller than the target. And that's another example again of a buy trade. So similar again with the same technique. When we had all the moving averages cross up, we had a stop loss of about 133 pips and a target of 515 pips, and we can see again that's a reward to risk ratio of 4:1. And I have a few pros for the high reward technique. Now, there is no need to have several wins to break even. The high reward technique is great, very sensible approach to trading, is great for returning high profits. You don't have to have many trades. So out of 10 trades, you only need to win 2 or 3 trades to become profitable with a high reward to risk technique. And but the thing with this is, for you to get this sort of opportunities these days where we have a lot of computer trading, you find very fewer opportunities having these wide moves. However, they still exist in the market, but it's just a con. In itself is not a bad thing, but if you want to always be in the market, then you want to have this. And as well, this requires an immense amount of patience and emotional control. Because if you do not have control over your emotions, you will get out of this trade at about this level here. But since the technique had not been breached, it still remain valid. It requires you to be patient to take this move until the technique becomes invalidated. So those are just the cons. They are not bad in themselves, but they're just some of the things to consider when you go for high reward techniques. Now, when we go to high probability techniques, this basically represent the win to loss ratios. So it is not high reward against risk. This is about win to loss. So what's the probability of this technique, of this trade giving me a profit? So once I get into a trade, what's the probability of it giving me a profit? That's what high probability techniques is. Rule of thumb is typically a sustainable technique should have at least 65% probability of giving you a profit. And also note that this must not have a high reward to risk ratio. So you're not looking for 4:1s, 2:1s, not even 1:1 in certain cases, even though my recommendation will be to have at least a 1:1. but you don't have to have it. A lot of scalp trading is high probability technique, because you just want to take the quick profits and you're out of the market. And so when we give an example with some reversal patterns, when you look at the pin bar or the hammer, the long tail candles in this example, you can see we had 1, 2, 3, 4 opportunities, and every one of those opportunities returned a profit. So there's a high probability that when we have a long tail bar follow a period of either bullish or bearish price action, we tend to get a reversal, and that's a high probability setup, as it were. We also have a high probability setup with the 5TT gap system. And with this, we can see on this example, we have on these examples, we have 1, 2, 3, 4, 5, 6, 7 examples, and we can see, boom, the entire gap was closed there, 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 and the gap was closed here too, and the gap was closed here too, even though price continued to move up, and the gap was closed here too. So again, this is high probability. We can say out of the 8, 1, 2, 3, 4, 5, 6, 7, out of the 7 opportunities, definitely 6 of them gave us nice profits. 1 gave us partial profit, but again, it was a profitable trade. And so what are the pros? And I just said here, there is a greater than 90% probability that when a gap shows up at the open of a new candle, the price moves to close that gap. The pros is the higher win ratios. You've got greater opportunities to profit. It's easier to follow. It's typically quicker profits. So like I said, some scalpers or most scalpers also use high probability techniques. So it's quicker, typically quicker to take profits and you're out. And there's less emotional pressure. So you're in, you're out. You're not holding on to trades for too long and worrying that something will happen to your profits. However, without good risk and trade management techniques, you can lose a significant amount of your profit with one loss. So whilst trading high probability techniques, one must apply very good risk and trade management techniques. Now, which is better? Right, as I said here, if I'm compelled to choose, I will usually go for a high probability setup, simply because it gives me an edge in the market. And to win in the market, you just need an edge. You need to be doing something. You need to be exposed in a way that you have a better opportunity to turn out a profit than any other person in the market. So the reason I'm biased towards it high probability setups is just simply that it gives me an edge to make money in the market. However, it's important to note that I apply both. I don't ever apply just one. I apply both techniques in my trading. And you can see, for instance, on the 5TT gap system, it has this unique ability to combine both a high probability setup that we've just seen, as well as a high risk to reward ratio. And you can see from the example on the side here, and this is one of the setups that we had. And so that was a gap down situation that gave us a buy opportunity. So we entered the trade at that level there. The stop loss was just about 22 pips, and we can see took the profit around here for just 90 pips. It could have continued going up. And so at minimum there we had 4 to 1. It could have been 5, 6, 7 to 1 on that gap system opportunity. So this is the reason why the 5TT gap system is a very unique and consistently profitable technique. If you don't already know about this, you would also notice from all my videos and all my other material that I have an indicator that shows you the gaps on the charts on multiple currencies that you can just pick out the opportunities and take your trades. And if you want to get a copy of that, just follow the link below this video, and it will take you to the page, and you can get yourself a copy of the gap 5TT gap indicator. And if you have any questions, if you want me to explain this any further, or if you want me to clarify anything, just feel free to get back to me. Once again, my name is Chima Okoro, and you can reach me on admin@5talentstrader.com. Wishing you the very best, and like I always say, stay disciplined. See you soon. Cheers.